always believe and say what I'm about to say, repeat it with such great effort, and make sure that you understand what you are saying and mean it. You are definitely going to make it. Our daily affirmation: I believe, I live in abundance, I am what I say I will be, I will win. Say it one more time. I believe, I live in abundance, I am what I say I will be, I will win. Now to our daily prayer. Father, we thank you, we bless you. You are good, you are friend, and our firm foundation. We thank you for such an opportunity given to us that we will be successful in your name. We are grateful for such an amazing time in your presence, that we will win and continue to win because you've given us that mandate to be successful for your glory alone. In Jesus' name we pray. Amen. Welcome, guys, to QuantCove. Welcome to QuantCove, and today is the 23rd of July, as we are about to analyze another set of trading tools here on the market for us to be profitable. We know this is QuantCove, and here we don't predict the market. We trade based on systems. We analyze the market and follow what the market has for us. Therefore, at QuantCove, we accept mistakes and we also correct ourselves to be able to be successful together. And as I always say, we should not trade predictions, but only trade processes that comes through the systems that we've actually put together for all of us. Now, let's log into the comment section with all our trade setups and all comments or any questions that we have bothering us for us to be able to be successful together. One thing that here we allow people or everyone in the community to do is to put in your setup. We will discuss about it. Where we have good trades on your setup, we will also pick it up and then let everyone benefit from. Now, this is the chart for today, and today we are going to use the trading view as a very good tool that we always use to analyze the market. Bear in mind, this is where all trade setups and executions are made, in as much as you need to connect your broker to your MT5, or you can also connect your broker through the trading view platform here, and based on that, if your broker is listed, you'll be able to trade directly using the trading view. It's a very good tool. Now, today we are going to trade the gbpusd, and we are going to introduce something new based on the chart. Today we are going to introduce the fact that we can analyze two charts at the same time on the same canvas. This plain sheet that we are seeing here is called the canvas, and today, as we all know, we will be starting our analysis from the daily bias, which is in a mess right now. So we are going to correct it so that we see what the market is offering to us. Currently, we've had some highs and we've had some lows, as the market should be. And today's daily bias is actually based on the downtrend that has been on the market for gbpusd for some time now. Since last week, we've gotten the downtrend based on this based on this resistance that we find ourselves having. And as I always say, at a good resistance or a good support, the market will move in the opposite direction. It's not prediction, it's actually a way for us to be able to understand the fact that the market is in diverse ways and it operates based on its own algo. So we need to follow the systems that the market is actually trading on and not what we think is good for us, because we can never move the market. The market can only tell us where it is going and to do it as such. So based on this, we have a bearish momentum that we can see from here, but there is also a critical zone here and a lot of liquidity playing in the market. Now we'll scale down to the 4-hour time frame, which we always do, and we are going to see what the market is having for us today. Now we can see that the market has actually, on the 4-hour time frame, has actually given us a high here, which we saw the falling wedge, and then the wedge was broken by this candle and finally came to take all the liquidity, or we can say the market swept all the imbalances based on this momentum that happened on the upside. So this is why we have this movement. Now what we can also do based on the 4-hour is such that we are going to, first of all, let's clean up the mess here. This is where all the trade setups that we work on actually comes to play. This is where we'll be able to group them so that it doesn't become a mess. That is why we've named them, we've actually labeled them with the dates, so that we can actually refer to whatever the market had for us. So now we are going to hide it because we don't need it anymore. So today we are going to start a new tree, object tree, and based on that, this is what the market has presented to us. Let's try and analyze it. Let's see how best the market is going to go in our favor based on what it is doing. First, we are going to identify some lows currently. So we have a low here. We have this low. So we can see we have buy side liquidity. So this is 4-hour. So we are going to label everything based on the hours or the time frame that we are actually using to analyze it, so that anyone can understand it as we scale down. And based on this, we will all see the effect of it, and we'll appreciate why we need to break down the market to its simplest form before we actually take the trade. Now I'm back to business. So this 4-hour, this is what we are seeing currently. We have buy side liquidity here, which we can also see is a support zone So let's put it there and see. So we can always add up support. So still in the 4-hour time frame. Now we can see based on this movement, this fair value gap has actually been mitigated. What happens to fair value gap is such that it is based on the imbalances, the momentum of the market. So it creates imbalances. So the imbalances of the market forms the fair value gap. Okay, so in this case, we can take our tool again and look at our low here. Although we've created a low here, we have another low here, and then we'll match it. We'll match the low here to this candle, the wick of the candle. We have to take note that wicks of candles are very, very important. Why didn't we put it here whereby there's a wick here? But this is not the low of this movement. We need to match it to the low of this movement. So in this case, this is it. We can also label it as 4-hour. Let's leave it here. We will add a certain name to it when we actually find the pattern. Now we are going to connect this same line, which is a trend line. We can all see here a trend line labeled up there. We are going to mark the high here, this high, and then this high. In as much as they are falling doesn't mean there is no high. There is high, because this is the low, this is its low, this is its low, so high. Okay, that's why we have high, higher low, and we have higher high. Sorry, this is we are dropping. Sorry, so this is the high. We have lower low, we have lower high, we have lower low, and then we have lower high, we have lower low, and we have lower high, and lower high also here. So now we are going to connect it to the tip of it, which is the wick. The wick is very, very important, and we need to understand the fact that wicks are very, very crucial on the market. Some people only mark the body of the candle, which is the solid side, but I urge you to mark your zones based on the wicks as well. Do not ignore it, because it carries a lot of liquidity that can prove to us that something major or good is going to happen on the market, depending on the direction that the market is actually going. So we are going to duplicate this and match it to this one. But when we match it to the tip of the first one, we will see that it is not connecting any wick at all. So now we need to actually connect it well to it, so that the indicators or the line, the wicks will be connected. Now this is what we are going to do. So we are going to connect this wick. So this is how it is. So let's stretch it out a little bit so that we can have a full picture. So we can have, so currently we've pushed it to the wick of it. So now we can see it's connecting here. There's a little bit wick outside, which is good, because that is actually what the market did. The market does not give us a finite or a perfect lines or indication as to what it is doing. It takes us to imperfection for us to be perfect based on what we see. So this is another file. Now we will name it a falling wedge. The other day we talked about what a falling wedge is, how it forms, and what it does. So this is a 4-hour falling, so falling wedge. DG. So it's a falling wedge. Let me make it ing. This is a falling wedge. And this actually helps us to understand the fact that the market is moving in a way that when we connect the dots from the tip of the wedges. So let me finish this one. When we connect the dots from the tip of the wedges, so the lines are the wedges that we've drawn, and we need to understand the fact that we have to connect it well. Now what happens is when we have falling wedges, this is how it is. So it came from here, the movement started from here, so this is, now we are connecting the dots so that we know how the pattern was formed. You see, this one did not actually go to the line, which is understandable. It's fairly understandable. So this is what the mark, because when we zoom into the lower time frame, we will see that there are possibly some other blocks, fair value gaps, and whatever indication that the market is presenting to us. Someone will say, why are we not connecting to the tip of it? These are fake outs and fake ins of the wedge, so we don't need that. But we have to actually know where the market is going based on what it has for us. So even though we are doing live trade, we are still learning some patterns here, so please pay attention to whatever it is. And then we have this, and currently this is the low that we find ourselves. But then whatever you do on the market, you need to have the perception of the market having a bullish momentum and then a bearish momentum. That means the market can go in both ways. It can go up, it can come down. So we don't need to stress ourselves by saying it is going into just one direction. Now, these are what falling wedges does, or whatever pattern it is. We need to make sure that during the period that is forming its pattern, we need to look at where it is going to break out to, and where if it's going to break out to the upside or it's going to break out to the downside. Currently, when we zoom into the lower time frames, we are going to see some other blocks and some fair value gaps in there. That is why the market is actually not coming down like that and is doing what it's doing, because it's in the middle. But we will understand something from this point, that we have a consolidation somewhere here. I know most of you have figured it out because you are very smart people and you are learning well on the market. So this is what it is. Now, for a falling wedge, mostly when it falls to an extent, it breaks out from the upside. But the market can also decide that it is going to break out. It's going to actually continue to break down further based on the liquidity that sits beneath it. So that's why I said we can't predict the market for the market to do what we want it to do. It will only do what it wants to do based on its algorithm. So in this case, if we are able to get something like this, then possibly we should break out from the top to this place. So we can do this. It will not just go here. No, it has patterns that it needs to follow. Possibly a fair value gap or another block, and it will also target this high, because this will serve as what? A resistance. This zone will serve as a resistance, if that is the point. If it is this way, then it is actually going to meet another resistance here. And I said at a point of resistance and at a point of good resistance and then good support, the market moves in the opposite direction to seek for liquidity before continuing the move, because the market will not go straight up into buys without a little setback, no, or in the opposite way. So this is what we can anticipate, and then we get something like this before we can target the high that we have here, and then possibly some, and then if it will go, then we know. But let's end it here. Okay, so possibly we can stretch it like this a little bit, because the market does not move in straight line, it moves in diagonal ways. So we can actually get something of this sort. Yeah. But now on the downside, we can also get to understand the fact that If it is actually going to break down, then we are going to have something of this sort from here to this support, and it will consolidate a little bit before, so there may be a pullback, and then we can actually see that we have liquidity sitting somewhere here to come here, so we can have a break of structure from this point, all in this 4 hours. So let's know that we are still in 4 hours before we can come and seek liquidity in here. So possibly we can have something like this. We can have something like this. That is if it is going in that direction. So let's end it here with what we are seeing. Okay, now we will hide these things. You see the path that we created for the chart not to look so complicated. We are going to hide them so that they become what? Very clean. And that is how trading should be. Very clean setups, and we can always, go back for them. So it's not lost. We've not deleted it. It's still there. We can have it onto whatever we want to do. Now let's look at something. So still in the 4 hour, we can identify the fact that we have a consolidated period from this place into this zone. So this consolidation, we can put it, so we have 4 hour consolidation. Now this is where the tricky part is. In as much as we've drawn our patterns and all that, okay, let's bring the upside down. Let's bring them back and we will see. So you clearly see that when we're marking the zones in the 4 hour, I keep saying that when we have consolidation period on the market, let's wait for the breaker. So basically you can see that we're marking it perfectly based on how the consolidation is forming, and we didn't even drift without even creating the consolidation. That is how we need to understand how market works. When we are able to understand how the market works well, we are able to do some things without even thinking through or possibly referring to whatever we've done in the past. But that's just by the way. I believe in all of you, and I know we are going to make it. Now, based on this consolidation, I stretch it so that we can know consolidation can take a longer period. And let's look at something. Today we have news coming in. Today is 23rd, but not today. I think so. That will be tomorrow. Today, let's look at the high value news that are actually coming. Possibly these are euro, and then something from Japan. It may affect the market because it has a high probability of the impact on the market. So let's see what happens. And possibly these are even okay, they are later in the day. All right, that's cool. But tomorrow we have some news from the German market, and then from the UK market as we are trading. And tomorrow is Friday, so it's going to be hot. Let's hope it goes in our direction as we keep learning. So based on this consolidation, we need to look out for the breakout up, So now what we are going to do is we've been able to analyze the 4 hour, and we are going to, so we can even open them up. We are going to group them, and when we group them, this is it. We are going to name it um 24 hour, we are going, let's say 4 hour, then we put the dates there, so we can do 23rd July. 23rd July. So you see, when we do this, now we can move on to the lower time frames. And you see that when we have that, anytime we want the 4 hour setup to refer to, we can just come and click, and it tells us whatever it is here. Because when we draw the lower time frame setup in the higher time frame setup, it distorts it makes it not nice. So as I keep saying, keep your chart very simple and clean, so that you'll be able to understand what is going on in the market well. Else it will be so complex that you may even be confused and you not understand what is actually going on. Okay, so let's take a moment to look at what the 4 hour holds for us currently. So currently, as we all know, this is what the 4 hour is doing, and it's still consolidating. We've not broken away from the consolidation in terms of the downside or the top side. Let's leave the market to do what it's going to do. So another moment, maybe a minute or two, to see what the setup is actually going to have, or whatever we've done. Let's see, and then be able to understand it more. We'll move to the 1 hour time frame pretty soon. So based on what the market is doing, we are going to hide this, and we are going to go into the 1 hour time frame, so we can see what the consolidation is also still doing. So what we can do is, let's lower this and release the consolidation. Let's see how it's playing in the 1 hour time frame. because in the end, it is what we see and what the market presents to us that's actually going to be valid. So we need to make it worth it. Today, I want to encourage everyone that it is never too late, okay? Whatever your situation has been, it is never too late. We can make it even in our 50s, even in our 70s, provided we have life. Life is the most important thing that we always need to understand, that it is the best thing that we have. Provided we have life and we have that energy, God is actually going to see us through. And here, I always encourage us to keep doing great for ourselves. In as much as we are trading, this community is built for us to be able to understand the fact that we can always reach out to each other in the comment sections, and then make good use of whatever we have, because we have quite a good number of traders here, and I believe we will all grow up to be good traders and be profitable. Not just good, but profitable, because that's the aim. And we pray for good insights so that we'll be able to reach our financial goals. It is very, very important for us to be able to take care of our family legitimately, not in diverse ways that does not make sense. So I urge you all to keep going. It's not easy. Yeah. Even gold, for example, if you have gold in its raw form, it comes from the dirt. It never comes as pure as it is refined. I mean, as pure as when it is refined. Gold makes itself dirty before it goes to the refinery for it to be pure. So whatever that we have in the past, let's take it as something that is gone, and we can always start. I think today I saw a post that can someone who is 31-year-old start all over? I saw it on X, formerly Twitter, and I think it is possible. Most people make it when they grow older, not because of any laziness or whatever. Everyone has different paths, so I urge you all to keep focused and then do whatever you need to do. Learn well, fund your account, don't overtrade, and keep glued or stay glued to your principles that we are learning here, and then execute your trade little by little, making sure that you are conforming with good risk to reward management practices that will actually help us to to secure our account, not to blow it. So know that it is possible that we can make it big, and we will make it big on God. So now, based on the 4-hour chart that we looked at, currently we are on the 1-hour chart, and we've identified the 4-hour consolidation based on this setup that we are trying to form. We got to know that we had a falling wedge which currently is consolidating, and today our main focus, especially this morning in Ghana, wherever you are watching from based on your time or currently, our main focus is based on this consolidation, because this consolidation can actually push the market up or push the market down depending on what the market wants to offer to traders today. So our main focus will be here. Now we will dive deep and then cover this consolidation, and as I said, we will be grouping all the setups that we are doing. So this consolidation, I want us to bring it to the 30 minutes time frame. Let's see what it's doing. So we can see that we had this rejection from here, another rejection, good movement in the consolidation period. Currently none has gone way above or below it. Looking at the 4-hour consolidation that we saw here, we've seen that it is in its perfect mode. and currently the 30 minutes candle that is just formed is in the bullish state. That means it's forming green. So are we going to go up? Because even in the 30 minutes, when we zoom in, we are going to see that we have a fair value gap here that needs to be touched. All good fair value gaps and other blocks will be mitigated. That means they will be consumed by whatever the market is doing. Why would it be consumed? Because fair value gaps form as a result of the imbalances of the market. Market moves in ways that sometimes the momentum is high. So when it's moving, it's going to seek liquidity somewhere before it continues its journey. And always remember that it is not based on what we think the market will do, but it's based on what the market has planted in its algorithm. That is why the market will move. Now let's move to the 15 minutes time frame. Let me close this. So we can still see in the 15 minutes time frame that the fair value gap here is due. So now what we will do is, for the chart not to be clumsy, we are going to do this. So based on 15 minutes time frame, we are going to pick this box, which we can turn into any shape. Currently we are going to use it as a rectangle, and then we are going to mark this zone as 15 minutes fair value gap. But it's not just a fair value gap, it is a bearish. So 15 minutes bearish fair value gap. So based on this, we can see that the market, so as I said, we are focusing on this zone, this consolidated period before any move on the market. Let's look at something. We have this whole zone from here to be a support, and it is in the 15 minutes time frame. So this is buy side liquidity, or we can say simply support. So this is what it is presenting to us. Now at a good support, so even if we stretch it to the back, we will see that at the consolidated period area, this support was tested one time, the second time, the third time, and we have its fourth time. Now good support and resistance do not just appear on the market. We will actually have it tested multiple times so that we'll be able to know where it is going. Is the momentum going to break beneath the support or the resistance, or is actually going to go in the diverse ways that it wants to go? Now at support, some people will say, okay, since this is not a trade that we are plotting, this is an example. Some people will say that if this is the support and then it was tested here and it is tested multiple times, okay, if it comes to us and we can clearly see that the consolidation period is still intact, some people will say that, okay, when it's tested again, I will take it and I will only focus on the consolidated time period, and possibly not over risk, so possibly someone may have taken this trade. This is just an example for us to see what possible outcomes may happen on the market that people may decide to take trade. And this can make someone wealthy, not necessarily billion, depending on the capital and the risk that you are taking. But this can make someone's day so good such that the person does not need to trade again for the day. If you imagine someone takes this trade and then makes about $500 or $1,000, the person may say, okay, let me just pause for the day, depending on your target. Everyone must have a daily target. Now let's look at something. This is where the consolidation is, even based on the 4-hour consolidation. Let's look at something. Now someone will say that, okay, since we are using the consolidated part, and maybe so let's copy this again and we'll understand something. So someone will say, okay, since it's a support, I will go this way, and eventually the person makes it. Now the person may also say that, okay, since it's a consolidated stage, we will do it like this, where my profit actually ends, I will take another to the main zone, which is the support zone, and I'll keep my stop loss based on just the consolidated period. So we can always see that based on consolidation zones, we can have multiple trades in and out of that zone if only we see them to be a clear consolidated pattern without failure. So I urge people or everyone to stay glued to your consolidation period. And if you are free and you are stick to your screen, you are stuck to your screen, and you want to take multiple trades on, just take about maximum 4. So in this case, we can have maximum of 4. So even if we say we are going to take another trade at entry, so we have 1, 2, 3, 4. And then someone may also say, okay, then since I'm doing buy and sell on the consolidated line, I can then say, okay, then let me come here, and eventually the person will make money. Okay, but this is not magic. This is not any get rich quick scheme that we are just plotting because we feel we've seen it, so we are plotting it. No, this is the fact that we are working in a consolidated system, and consolidation always plays in the market. An example of a consolidated pattern, let me show you, can also be this. So if, for example, we are consolidating in this pattern, we can also go down, which will get us, and we can go up, and then we can go down and we go up. So basically, consolidated systems on the market forms almost everywhere. But the market, we need to understand that it doesn't just trade, or it doesn't just place itself at random places because it wants to. And today we are going to introduce something based on what the market does. We are going to introduce a second chart in the same canvas. As I said, this platform that we are checking out right now, the interface is called the canvas. So now we can introduce the second chart side by side or up and down and say, okay, so this is what we can do. But one of the key things that we need to understand is that when we are doing this, we need to match it with its corresponding indicator. This corresponding indicator for GBPUSD, which is the Great Britain Pound USD, is actually the DXY, which is the dollar index. Dollar index actually let us know that if it is going up, that is, if the dollar index is going up. So let me plot the dollar index here. So here we can change it. We can do DXY, and I prefer to use any of these. We can use TVC. So let's pick TVC. Now let's look at something here. Which one do I use? I can say, okay, that's cool. TVC. Now this is it. Look at the fact that this zone from here, the dollar index was moving up, so we are seeing the GBP USD to come down. Now look at this candle in the same time frame. You can see the same time, 15 minutes on both sides of the chart. We can see a bullish candle here. Let me increase it a bit for you so that you understand what I'm saying. We can see a bullish candle here, but there's a bearish candle on the dollar index. So they have an inverse correlation. They have an inverse correlation of how the market should move. It doesn't just happen instant because what the market does is, okay, when this one moves up, then this one moves down. No. One of the things that you should know is that when you are trading, you have to look at what correlations what pairs you are trading. Now let us list a few things here. As I said, this is a live session, yet we are learning something. So we can even see that the market of this candle is actually, it was trading up a bit, and then we saw the candle that was green initially becoming bearish. So that is how the market moves. For us to be able to know what to match the dollar index, we need to look at the pairs. All pairs ending with USD. So we have GBP USD. We have Euro USD. We can have XAU USD, which is gold. We can also have we can have JIB. We can have let's stick to these three. Okay, but let's note that pairs ending, or we can have AUD USD. That's Australian dollar United States against the United States dollar. Now take note of something. I'm going to mention something critical here. So let me finish typing here so that we don't we don't mix things up. So we have the DXY. So we are going to put the DXY here, and then we are going to copy this and bring it here so that we know that this one. So this is our main key. Now what we are going to do is we are going to have pairs starting with USD. So US Canadian dollar. Now we can have USD JPY. We can have USD JPY. That's United States dollar against the Japanese yen, which is a very good indication of the market. The Japanese market has a lot to tell you when it's actually trading. So currently we can even see from this angle that the candle is bullish when the DXY candle is actually what? Bearish. That is the inverse correlation of it. And then we can have there are a lot. They're just moving, like, distorting my brain a little bit. But let's get it stuck to this place, and then okay, this is it. So we can see that if the market is actually moving up for pairs ending in USD, for DXY, it tells us that we have an inverse relationship. So this one will be moving down. So this is how the market works. 90%, this is how the market works. Any pair that starts with USD is in favor of the DXY, which is the dollar index, as we can see here. Now, that means that when USD or dollar index is moving up, these quotes, which is the USD Canadian dollar, USD JPY, they move upwards, or they move with it. Whatever direction that the DXY is moving, all pairs starting with USD actually follows it. In this case, if we have USD moving in the negative direction, which is currently consolidating a little bit here before it makes it moves, you will see that currently it is moving downwards, which is the DXY is moving downwards. That means all pairs with ending with USD, such as GBP USD, which we are currently analyzing here, as DXY is moving in the negative, all pairs ending with USD will be moving in the opposite direction, which is currently in the positive. Why does it happen that way? This shows that the pairs are actually trading against each other, but what starts it is the one in favor of. So we have the base and we have the quote. You get it? So this quote is actually what we are actually looking at for. And it makes sense because as we are seeing it now going up, this is moving downwards. That's just by the way. So here we can actually, um, we can actually delete it because we don't need it anymore. The understanding is such that when we have pairs on the DXY, let's look at the quotes that we are actually trading for. And that makes sense that we will be able to take the trades. Now, as I was saying earlier on, someone may also say, okay, since the zone has been tested multiple times, then he or she will also take another and be targeting this side. Now, the person may not target this space because here is where the bearish fair value gap is. So let's see what happens if the market actually gets to its fair value gap. In the meantime, let's close this consolidated period that we have seen here, and we don't need these anymore. We don't need these anymore. It's just for our consumption, for us to know how the market works. So this is what we are actually talking about. So trading is actually a very nice thing that we need to take note of. So currently, this is what the market is presenting to us, and we need to understand it well, such that we will play by its rule. Let me encourage you once more. During this session, I'm going to encourage you from time to time. So let it be the norm. QuantCove, we started from somewhere. For years, I've been planning on how to be able to, you know, put something up for the community, anyone who wants to trade. Eventually, I learned the trade. I learned it. I never slept on it. Sometimes it's tough, sometimes it's good, but I kept pushing because I want the channel to grow and then be like this for us all. It didn't come by chance. Have we spent more than 5 years thinking about how even just the name of the channel has been more than 5 years? Not to even talk about the content that we are actually going to talk about for us to be able to learn a lot. This is something that has always been on my heart, and I never gave up on it because of you, not because of me. No, if it's just for me, I think then I just want to sleep, make some money and sleep. But it's for you. I don't want to win alone. I want you to also win with me. Let's rise onto the top. Yes, we can't drag everybody to win with us because some people may not see what we are seeing, but we alone knows what we are actually about, and we want to be financially free. Let's help ourselves to be able to understand what it takes to trade. Let's help people, anyone who wants to actually learn how to trade. Let's direct the person to subscribe the channel so that we can also grow. Very soon we'll be having TikTok live, so that our TikTok viewers will also be able to tap into the knowledge that we are sharing here. God is our help, and I want you to know that always trust in God. Always believe the fact that God is with us and we are going to win. There's nothing too hard for God, and there's nothing that is going to bring us down. So in this case, back to the chart. First, I was just showing you one chart, but now this is what a paid chart can do. It will give you multiple charts that you'll be able to analyze, multiple tools, and then you are good to go. For the DXY, we can see that we have a bearish order block, but it's invalid. It's invalid because the fair value gap in the bearish order block has been taken away. Therefore, I think it will surpass this test here, creating this barrier, to surpass it onto the downside, seeking liquidity. Possibly this is where we should have an issue whereby the market may be able to try rallying a bit up before coming down. But this is the barrier that we are actually looking out for. So based on this barrier, we're going to have DXY touch this and then pull back a little bit before going on to the downside, because at this point there will be a tough reaction because of this fair value gap that it has. So let's wait. Let's try and understand what the market is doing. Now I've opened a major key to everybody here that the correlation of the DXY and the Great Britain pound are inverse. So if DXY is actually going up, Great Britain pound is actually going to go down. That means this whole move, the move from this top to this, is basically this to this place. And it's not magic. It's the system doing its thing on the algo. So let's not rush it. Let's trust the process and know that we are here with you and we are going to win. So we can close this. Now we can say, okay, based on this, we can say, let me select this and see this one. Okay, we can say, so let's group it. We can say group, and then we tap into it, and we can say 15 minutes because that's the time frame we are using. So we can say 15 minutes. Let me just keep it to a normal low caps, a low lowercase. Yeah, 15 minutes, 23rd July. July, so that we can always refer to it. Let's respect the month. Then we press on enter. Then we can do it. So even if we want to hide it, we just come here and it becomes a clean chart for ourselves. So this is basically what it is and how it's going to be today. Yeah, so let's see how the market is going to play. I'm here with you. Log into the comment section whatever you need to learn, and then let's see how best we can learn and make it. Yeah, so currently we can see that the candle here on the DXY is forming a bullish candle. That is why we are seeing that the that of the GBP USD's candle, which is on the 15 minutes time frame, is also dropping. So as we mentioned earlier, there is an inverse relationship, a negative or inverse relationship between DXY and Great Britain pound. All pairs ending with USD, when DXY is actually rising, they form a negative inverse. That means they fall. So that means that all pairs beginning with USD, when we look at it in a way that DXY is going up, they rise. And then the opposite is the fact that a pair ending with USD will fall. So this is the trick about using DXY to trade, because it's a major indicator telling you that the direction is clear. So currently, as we all know, from the GBP side, this is our consolidation zone, which is on the 4-hour side, and we are learning how to trade within a consolidated zone before the major breakout. So this is how our morning is going to be, and I encourage everyone not to give up. Trading is one of the most difficult things ever in this world, but it is worth it, because with time you get to learn it and you are able to understand how the market, and it becomes the easiest thing at all that you ever thought of. So stay glued to your seats. Let's see how we are going to make it here. Look into the comment section whatever you want us to discuss, and then if you have some trade setups, we can actually, look into it so that we analyze it to see how best it's going to go. Currently, we are on the GBP USD and then the DXY. That is why we are analyzing them together. And today, the screen is different from what we usually show to you. Usually, we show you um, one canva. I mean, just a pair on one canva. But today, we are showing you two pairs on one canva, and this should tell you that migrating from a paid from a free version to a paid version of the trading view is a good thing. Yes. So the other day I was telling you guys that I'm using the free version so that you understand the fact that you can even trade using a free version. But this is the the account which is paid, and it's worth it for us all to be able to learn a lot from it. Yeah. So this is it. Currently, based on this tutorial, our target is to this 15 minutes bearish fair value gap that we are seeing here. So let's see if the market is actually going to go away. Currently, we can see that based on the inverse relationship of the DXY, this is what the market is doing. We are currently having this candle actually dropping a little bit in real time, but see, it's playing hide and seek with itself. But that's just by the way. So we are still live, and the journey has been quite okay for the pair. Just bear in mind that we are still focusing on the 4 hour consolidated period that we actually looked out for, and it's still in session. I mean, so if we trigger this, we'll see that we are still in this zone. This zone, the market needs to break on either side so that we can actually identify the fact that it is going to the top side or to the downside, then we can take a good trade. But currently, this is a test that we are doing. Anyone who is already in a trade to the upside, congratulations for some good money that has come through. One of the tricks in trading that we can do is also to try and then bring our stop loss to entry whenever we make more than 50% of our trade. So imagine as the market got to somewhere like this, we could have placed a stop loss at this entry, so that even if we leave the market, I mean, we leave our devices that we are using to trade idle for some time, and then the market reverses, we don't make entire loss when it actually pulls down to this side. Because at the end of the day, we were in good profit, and by so doing, we'll be able to secure some zero score, or maybe a portion of it. Yes, and as it gets higher to towards your uh, TP, which is your take profit level, then you can also extend your loss onto maybe about a profit margin of about 15 to 20% of the trade that you've taken. So that even if it comes down from the top side, you can still secure something for the back. So always make sure that you are using good strategies and good psychological means to make money on the trading platform. So currently the market is still in its consolidated state in the 4 hour zone that we talked about earlier on. And then, as I mentioned, what we need to do to secure profit is mainly when we get about 50% or more, we move our stop loss to entry, and then when we get more than half, closer to about, let's say, TP, then we can move our stop loss to about 15 to 20% of it, so that even in case if the market pulls back so deep just as it has, then you can secure some profit before it takes you out. But as we know, this is the demo trade that we actually put in just for us to see if this setup, trading in the consolidated stage of this market, this current market, will actually be worth it. And we can see this is another time that the market has retested its support, and we can also clearly see that the DXY, which is the inverse of the gbpusd, actually pushed up after revisiting this fair value gap that it has. So let's wait for the market to go in its way, depending on whatever it is. As you know, even at QuantCove, we learn from all mistakes and do not shy away from whatever negatives that comes our way. Yes. Cheers. So clearly we can see that this test that we did didn't work out, because here is a pause on the market. This is a pause on the market for the DXY, which actually gave rise to this in terms of the downfall that is here on the gbpusd. We are still in the consolidated zone, so possibly this side should determine if it's actually going to break down or going to continue going up after it gets to the final part of the consolidated zone. Yeah, so there is some heavy liquidity here, which we can see that it created this resistance here. So the setup did not actually go to a fair value gap here. Yeah, so basically we could have identified this zone as a resistance. So yeah, we keep learning. So resistance. So that is where from there the market actually came to hit stop loss here. Although it had not fully hit stop loss, but it's still not a good trade here. So now we've seen the stop loss hit, so it is not a good trade. Yeah, so basically this setup. Now let's go to our consolidated zone. Let's see. So it's breaking downwards. Because we are seeing this as a bullish pause. So it has a bullish continuation in there. So let's see what 1 hour 1 hour is saying. Okay, so we still have the continuation going up like that. Yeah, so basically this is what the market is actually telling us. So let's see if we'll have a pause here again from the next 1 hour. Currently it has 25 minutes to elapse, and then we can have this one to when we come to this about this still on 50 minutes, so we can go to this and see, okay, what's gonna happen in the next 30 minutes. Still bullish. Let's check so there is a barrier here that is showing us that we have a resistance incoming, but based on that, this whole side, we need to look out for the liquidity here and to determine if we're actually going to get a further push upwards. So let's see what this is going to do. Currently the market is falling because of this bullish move that is going. So the consolidated zone has actually been broken down, and it keeps falling. Yeah, this fair value gap here is not a good fair value gap because of this mitigation. So yeah, let's take note. It keeps falling. Let's watch the market do its thing and appreciate the algo. So one of the things that we need to notice, that is it going to be a permanent zone whereby the consolidated zone will be finally broken downwards, or is it actually going to go up and it will be a fake out? Bear in mind this is a zone of resistance, so we have to also take that into consideration, this zone. So let's take that into consideration. Possibly it comes to fill this fair value gap before going up. So let's see what it does next.